So today we are going to discuss the concept of stock range and how to identify support and resistance levels. For example, if I want to invest in a particular company, such as NVIDIA, I need to understand its range. Currently, the price of NVIDIA is $113. If I invest today, I should consider the potential movements of the stock in both bearish and bullish markets. I- Yeah. In a bearish market, Nvidia's price might fall to $100 or $90. In a bullish market, the price could rise to $150, $175, or even $200. Understanding this range is crucial because it provides clarity and helps manage expectations.
Are you
Stocks
sharing?
typically do. Yeah, I'm sharing. Okay, just an introduction. Yeah. So here stocks typically do not double in value or drop to zero overnight. Instead, they move within a certain range which can be analyzed. So here you can see this is known as open interest of NVIDIA. And you can see here the current price of NVIDIA is $113 as of now. And to determine the range of the stock, we need to look at several factors, mainly open interest of the stock. Open interest refers to the total number of outstanding derivative contracts, such as options or futures, that have not been settled. High open interest at specific price levels often indicates significant support or resistance levels, as these are the prices where many traders have placed their bets. It provides insight into the liquidity and activity level of a particular options or futures market. You can understand it better when we look into it practically. This data, which you are seeing now on screen, is option chain. And this data can be available in many brokerage apps like Webull. Or simply you can search on Google option chain of the particular stock. Like here in my case, if I search NVIDIA option chain, you can get it. And stocks or options are closely related financial instruments, often used together by large investors. For example, an institutional investor, hedge fund, or a high net worth individual might purchase a large portion of a particular stock. While these investors cannot predict the future with certainty, they use options for hedging purposes or to generate additional income. Options are derivative contracts based on the underlying stock. Here we can see call options and put options. What is the call option? Means this gives the buyer the right, but not the obligation, to purchase the underlying stock at a specified price within a certain time frame. And whereas put options, here this gives the buyer the right, but not the obligation, to sell the underlying stock at a specified price within a certain time frame. In simple words, the people on call side will expect the stock to rise, and the people on put side will expect the stock to fall. So, so here, as you can see, the current price of NVIDIA is $113. So here you can see the strike prices. Strike prices from 50 to 220. From 50 to 220, and here the current price of NVIDIA here $113. So here what here means, this $113 and this particular line, only this $113, this can be called as at the money. And from one after $114, I mean this $113 is called as at the money, from $114 to $220. These can be called as out of the money. This, I mean, the current price of the stock, it is known as at the money. And the, I mean, this the greater than current price, which is from $114 to here we can see $220. All of these called as out of the money options. And then less than current price, in the sense $112 to $50. So all of these called as in the money options. So just I am repeating again here, $113, which is the current price, it is the at the money, and the less than current price, that is $112 to $50, that is in the money, and greater than, yeah, and greater than current price, that is $114 to $220, that is out of the money options. And and here what happening is, at every strike price in the sense, at every price, at every current price, whether it can be in the money, whether it can be at the money, whether it can be out of the money, people are purchasing lots, people are purchasing contracts, certain contracts. So here it is to remember that in every contract it contains 100 shares. For example, here $113, you are seeing 5,173 contracts, which is 5,173 lots. In the sense, in each lot there contains 100 shares. In the sense here, 5,173 lots into 100. So then the value is, I mean, we have to do into 100. Then the value will become, yeah, 51, 5 lakhs. I mean, something 5 lakhs value will come. So into 100, we have to remember that whatever the contract you are seeing, in each lot or each contract, it will be contain 100 shares. So here, I hope you had understood. If not, let me try to simplify. Imagine Dhananjay is a high net worth individual who has purchased 1 million shares of NVIDIA. Okay. Dhananjay is a person who is a high net worth individual. He has purchased 1 million shares of NVIDIA. Uncertain about the stock price future direction, he decides to protect his investment by buying options. Here is how he uses options to hedge his position. He buys 10,000 put contracts, each representing 100 shares, to protect against a potential decline in NVIDIA's stock price by paying certain premium. If the stock price falls, the value of his options increases, offsetting the loss on his shares. Even though, so in the conclusion, even though the NVIDIA rises or falls, Dhananjay will get benefited. So here what happening is, uh, Dhananjay had purchased some 10 million shares of NVIDIA, and he don't know what will happen in the future. Maybe like any anything like COVID-19 or any war breakout may happen, and the stock price may fall suddenly. There are many reasons. So what he will do is, he will hedge his investment by using option contract, by paying a certain premium amount. So what will happen? He will purchase put contracts. So even though the share price will fall, he will not get lost. He will get benefited at the end of the day. And there is another high net worth individual named Sairam, who believes that NVIDIA stock will rise, and he will buy 10,000 call contracts. And each call contract also represents 100 shares. If the stock price rises, the value of his call options also increases, and he will get benefited. Now, in the options market, Many investors like Dhananjay and Sairam will buy put and call options at various strike prices based on their strategies. So, so just like here, what the intention is to tell what is the range of the market. See, for example, today today the price of Nvidia is $113, and now I want to invest in Nvidia. I don't know. Means I need to understand the range now. Like if I am investing, how much amount will I lose, or how much amount will I gain? What is the range? I mean, it will not happen like I'm investing $113 now, and it will become zero, or it will double or triple. It will not happen overnight in the stock market. Stock market, this price of the stock will rise according to the range. So here to understand its range, we will look at the contracts. So see here you can see the open interest. Open interest in the sense how many people are purchasing the call contracts. Here also open interest means how many people are purchasing the put contracts. So here you can see here the current price of Nvidia is $113, and you can check where there are more contract out there. Here 8,084. Okay, it is somewhat less. Here 16,000 at $115, 16,712 contracts. Okay, it is somewhat less. Here again 6,200. Okay, it is somewhat less. Below that 7,583. Again somewhat less. Again you can check 14,000 somewhat less, 9,000 somewhat less, 32,000. Okay, here there is somewhat more contract at $120. There are
ಇದು
32,431
ಗೋಬಿ
lots have
ಪನ್ನೀರ
been purchased. Yeah,
ಪನ್ನೀರ
yeah, at $120, 32,431 contracts had been purchased. And again at $122, 87,121 contracts had been purchased. So here you can check from $113 where you can find the high contracts. You can find the high contracts at $120, and you can find the high contracts at $122. And somewhat and again $125 at remaining strike prices. Okay, the lot size is not that much high. It's somewhat less, but at $120, $122, and $125. So what I'm expecting is if the market opens on next week the Nvidia share will rise till $125, because here there are contracts are high, 32,000, 87,000, 30,000. So till $125, the contract I am seeing the contracts high, and again below 125. I mean after 125 again the contract count had been less till 130. So again I'm estimating that okay it will rise. I mean it will rise the price till $125. Why $125? You will understand uh, further. Now again I'm seeing I'm seeing on put side. So see in call options, I told you in call options when will these call people get benefited? If the stock price rises, these call people will get benefit. If the stock price falls, then the put people will get benefit. So here, if the stock price rising, these people will get benefit. So here there are maximum range till $125 here. So again, I am checking out put side. On put side at $113, there are 13,000 contracts, 13,000 lots. And again here 19,000, 9,000, 35,000. Okay, 35,000 is somewhat high. Again 11,000, 10,000, 13,000, 7,000, 15,000. Again here 68,000. You can check here. And it's so high, 68,000 contracts, 68,000 lots had been purchased at a strike price of $100. So here it determines the range of the NVIDIA. So here, if NVIDIA falls due to any reason, if NVIDIA falls, it can fall up to $100. There is very low chance that it will fall below $100, because see after $100 you are seeing there are very less lot size. There is not that much high lot size. But at $100, you can see 68,858 lots. There are more lots. And now, and same on the call side, you can see the more lots till $122. So here, now it will be a game, it will be a war, it will be a battle between these call people and put people. And I will try to explain in easier words and how this battle will occur. And by examining this option chain, you can identify strike prices with the highest number of contracts, with the highest number of lots. And it is nothing but support or resistance levels. Here you can see 32,000 contracts are there. And you can consider it as a support level. I mean, you can consider it as a resistance level. And again, at $122, there are 87,000 contracts. You can consider it as a resistance level. At the same, here at $100, you can see 68,000 lots, 68,000 contracts. You can consider it as a very strong support level. And this is what strong support level or resistance level can be called as. So you can identify strike prices with the highest number of option contracts. These levels often act as, yeah, these levels often act as, yeah, these levels often act as significant support and resistance points. Here, when call people will get money, they will get money when the stock prices rises. And when the put people will get money, they will get money when the stock prices falls. For example, I mean, in our example, here there is a person Dhananjay. I had told before. Here there is a person Dhananjay who had purchased 10 million shares of Nvidia, and for the hedging purpose, for protection purpose, he had purchased 10,000 lots of Nvidia, 10,000 put lots, lots of put side, lots on put side of Nvidia. And on the other side, there is another person, Sairam, who believes that the Nvidia stock price will rise in the future, and he had purchased 10,000 lots on call side. So here, when Dhananjay will get money, he will get money when Nvidia falls because he is a put buyer. And when Sairam will get money, he will earn when Nvidia stock rises because he is a call buyer. Now it's the battle between call buyers and put buyers. If the Nvidia stock price rises, then it will be lost to put buyers. Like that only now. If Nvidia stock price is rising further, then it will be lost to put buyers. I mean, when again, when the put side will get money, they will get benefited only if the stock price falls. They will not get benefited if the stock price rises. And again, when the call side will get benefited, they will only get benefited when the stock price rises. If the stock price falls, the call side people will not get benefited. So here, so here, if the Nvidia stock price started rising, then it will be lost to put buyers. So they will not let the stock rise further. If the stock price rises, let's assume that the Nvidia stock price is rising, then what will happen is this put buyers here. I had told no. In example, Dhananjay, he had purchased 10 million shares of Nvidia. Then what he will do is he will sell all his shares of Nvidia in the market at a time. I mean, at a time, there are many high institutions like HNI's institutions. What they will do is they will sell if the stock price is rising. They will sell all of these shares because they had already the shares of Nvidia. So they will sell all of these shares. So when they sell all of these shares, what will happen? The stock price will get corrected. The stock price will start falling. So if the stock price rises, put buyers like Dhananjay will start selling their shares to push the price down, protecting their put option value, which in turn will form the resistance level. Here in our example, Dhananjay is a put buyer. And if he sees that the Nvidia price is increasing, he will sell his 10 million shares, due to which the Nvidia share
Oh,
price will fall. Conversely, we also have a call buyer. When they see that the Nvidia stock price is falling, call buyers like Saira Mirwa start buying shares to push the price up, enhancing their call option value. In our example, Sairam is a call buyer. He will purchase 10 million shares of Nvidia, which Dhananjay had sold, due to which the Nvidia price will rise again, which in turn is forming a support level for the stock. In essence, the stock market is a battleground between buyers and sellers. As a retail investor, we need to analyze who will win, whether the buyer or the seller, and we need to ally with them. And in stock market, only retail investors will get afraid by the situations. People like Dhananjay or Sairam, who have high net worth individual or institutions or hedge funds, they will not get afraid by the situations or short-term fluctuations. They are so egoistic people. It's historically proven that the in stock market, whoever invests a big buck, I mean big amount of shares, big, I mean who will purchase at big level, they will be so egoistic people. Or they will fight like, I mean they will fight like, let's see who is a man between you and me. You can use all your power, but I will win over you. So it's like a typical, it's like a battleground between these call buyers and put buyers. So again, so here, high net worth individuals, institutions, hedge funds engage in strategic battles with each other by leveraging these positions to influence stock prices. As a retail investor, understanding these dynamics and identifying key levels can help you make more informed trading decisions. In essence, what I'm trying to tell is, here you can see at $113 there are more contracts at 87 $122 and $120. So what these people will try is, so here there are so many contracts, so what these people will try is, they will try their best to push the Nvidia price till $122. And at the same time, there are very high contracts at $110 and $100, 68,000 contracts. And what these people will try is, they will try their best to push the stock price from $113 to $100. So at the end of the day, who will win between these two? And these two people, they don't get afraid with anything. Like retail investors, if we invest, okay, if any short-term fluctuation is happening, many retail investors will get afraid, and to minimize their loss, they will sell their shares. Sometimes after selling their shares, the share price will rise further. And here, and these people will not get afraid by the fluctuations or situations. And these people will like, okay, let's see who will win. They are so egoistic. For them, their pride is more than the more important. So in that way, we need to analyze, as a retail investor, we need to analyze who will win between these two people. And and additionally, you can, and I mean, if you can concentrate on any latest update, latest news, okay, then it will be best. Like if the let's say, if there is any positive news, let's say here $120, here I am seeing at $122, 87,000 contracts are there. And if, and in future, tomorrow, if I suddenly see any positive news about Nvidia, okay, it's such a, I mean, amazing news, a very big positive news about Nvidia. Okay, then I will close my eyes. I mean, without any tension, I will close my eyes and purchase Nvidia, and and there is high chance that it will rise, because here I am seeing the data. Data is telling that there are more people. I mean, you can see, and here they can. There are three things. How to determine when the stock has bullish sentiment, or when the stock has bearish sentiment, or when the stock has neutral sentiment. So increase in, if the option interest, if the open interest in call options, yeah, if the open interest in call options is more on the call side, is more on the OTM side. It indicates bullish sentiment. OTM in the sense what? OTM in the sense greater than 113. Here the current price is 113 and greater than 113, greater than from 114 to $220. All of them are OTM, out of the money calls. So increasing open interest in call options, particularly out of the money calls, can indicate bullish sentiment. When the stock indicates bearish sentiment means increasing open interest in put options, particularly OTM puts. OTM puts, I mean out of the money puts. If you are seeing high contracts in the out of the money puts, then the stock indicates bearish sentiment. Like here, you can see at $113. Here I am seeing at $120 on call side, I am seeing 32,000 contracts. Here I am seeing 87,000 contracts. Whereas on the put side, I am seeing less contracts, right? 9,000, 17,000, 8,000, 6,000, 17,000, 5,000. Here anywhere I am not seeing high contracts, very less contracts I'm seeing, like in numbers, hundreds. So what it in turn indicates is NVIDIA is showing bullish sentiment. Nvidia is not showing bearish sentiment. If you see, for example, here how you can see values 9,000, 4,000, 2,000, 3,000. If the same values appears on the call side and the values which you are seeing on the call side, the same values appears on the put side, then it indicates that the stock price is showing bearish sentiment, not the bullish sentiment. And neutral sentiment in the sense, okay, it's like same. Here also I am seeing same value 9,000. Here also I am seeing similar value. Then it indicates some neutral sentiment. So, so at the so I hope so. If you are, I mean, if you have any doubts still now, I mean, I know it's very complicated to understand. If you have any doubts, please you can ask me. And and finally, what I had told you till now, what I had explained to you on option chain, the graphical representation of the data is this chart. I mean, here in this chart, whatever you are seeing, it is the graphical representation of the data which we had discussed till now, which we had discussed till now from $113 OTM, ATM, ITM, the battleground between call buyers and put buyers, where there are more lots. What is the bullish sentiment, bearish sentiment? The graphical representation of this data is a chart, simply. So here, so again, yeah, there is something. Yeah. And the graphical representation, the chart is nothing but the graphical representation of the data which you had saw till yeah, and you can see here. I'm sorry. Yeah, as you can see on Nvidia. For example, on NVIDIA, if I want to determine what is the support level, what is, I mean, you can say, I mean, here at $113, let's say if the stock price is falling further, falling further. So if I want to tell what is the next support price, you can see this can be one support price. And yeah, and this can be one support price. Yeah, and this can be one support price. So here, how we are determining this support price? Or of course, Nvidia is at its all-time high values. So of course, we can't able to see the resistance levels for this stock. But if we take any other stock as an example, okay, let's say, I mean, if anyone want to take any specific stock for me, I can take. I mean, if any one of you can suggest any particular stock or
Tesla.
like, yeah, Tesla. Thank you. Yeah, then the same case with for any stock, you can simply come into Yahoo Finance. I mean, or you can also check in your brokerage apps. All this data is available in of the brokerage apps too. So again, you can see the current price of Tesla. The current price of Tesla is $220. The current price of Tesla is $220, and here you can see the strike price from $75 to $450, and here $450. And here $220 is the ATM at the money, and the greater than $222 is the out of the money, and less than $222 is the in the money. So here again we need to see the what is the range of this Tesla. I need to see what is the range of this Tesla. Then I will see the contracts. So it 222 to I mean 222.50, there are 1,157 contracts. Again, somewhat less, somewhat less, somewhat less. Okay, here at 235, $235, I'm seeing the more lots, more contracts, which is approximately 36,500, approximately 36,500 contracts I'm seeing at the call side. So I can take, okay, if this week I'm investing in Tesla, there is high chance that it will rise from 220 dollars to $235. I mean $235. So again, it doesn't mean that it will not rise more than $235. Again, I had told no before, like it's a battleground. If the stock price is rising, these people will not sit silently. These people here, this many thousand lots have been purchased, and it will be lost to them. So they will try their best to decrease the share price of Tesla. So again, I'm checking on the put side from 1,000, 7,000, 60, 5,000, 5,000. Here 24,000. Here I am seeing the more lots, more contracts on $180. So here you can see on, yeah, here 24,000. I'm seeing the main, main I mean high contracts at $180. So it determines the range. So the range of Tesla is $180 to $180 to $235. This is the range of Tesla. So if I'm investing in Tesla, there is high chance that it may rise till $235. And if it falls, it may fall still $180. So because why? If the share price start rising, if the share price start rising, then these people, like here 15,000 contracts, 5,000 contracts, these people, it will be lost to all of these people if the share price is rising. So what will these people do? These people will sell their existing shares so that the share price will come down. When the share price is coming down, then it will be lost to all of these people who are present here. So what will these people do? These people will purchase these shares, or any new, I mean any new buyer will come and he will purchase all of the shares, which will in turn make the share price rise further.
Mary
Yeah.
breaks.
So here and here it forming a support level $180. It is a support level. It is forming a support level because here $180 it can be considered as one support level, and here 15,000 contacts, and it is also a very good number. You can consider this $200 as another support level, and at the same time 220 from 220 to here, you can see 36,000 contracts. It is a very great resistance levels. You can consider it as. So again, if you check further, yeah, there is not that much. So it is a very great resistance level. So simply by looking at this data, I can determine what is the range of the stock, what is the support level of the stock, what is the resistance level of the stock, and just the graphical representation. Whatever the data I am seeing here, the graphical representation of this data is nothing but these charts in simple words. The graphical representation of this data is charts. Here you are seeing, here these people, the call buyers, they are they are trying to raise the share price. They have tried their best. But again, I had told when the share price is rising, then it will be lost to put buyers. So what these put buyers had uh, came in came into force, and they pulled the share price further it down. And again call buyers had came, and they tried to they they tried to push the share price somewhat higher, and again put buyers came into force, and again then call buyers came into force, and they had completely taken the control, and they had pushed the share price. And again it will be lost to put buyers, because there are many contracts in put buyers. The data is showing some thousands of contracts have been purchased, then it is lost to put contracts. So what they had done, they had again make the share price fallen. Again, the call contracts had came into force. So at the end of the day, it is a battleground. It is a battle between call buyers and put buyers. So in addition to this, in addition to this data, in addition to this option chain, if you concentrate on some basic news about the stock, upcoming events, you will be the winner. Minimum out of five times, minimum three times, you will be the winner. And in addition to this, there is Charles H. Dow. There is a Charles H. Dow who founded the Dow Jones Financial News Service, which nowadays we can call it as Wall Street Journal. He introduced the Dow theory. Dow theory helps investors. Dow theory helps investors to identify and understand long-term, medium-term, and short-term market trends, providing a framework for analyzing overall market direction and potential future movements. Here we have six rules. Like here, the option chain. No, in option chain, the Dow theory, he had he had invented Dow theory. In the Dow theory, there are six rules. If we follow that six rules, at the end of the day, that's what the market in the same direction the market will go. What are these six rules? First rule is prices are everything. Prices are everything. Like, yeah, market are everything. So here it means what means? For example, see sometimes Netflix, if Netflix is going to release its year today, and its ER is very excellent. It had beaten all of its estimates. The ER had been very good, but still the price of Nvidia, the price of Netflix will fall. Sometimes it will happen. Sometimes let's say a few days back, Alchemist, there is a company Alchemist. It had released its ER, and the ER is not that much good. It's just decent, but still the share price had risen up to 10% on that day, not 10%, 8%. So sometimes, even though there are so much positive news, even though the ER is very best, even though there are so much positivity around the stock, still the share price will fall. Sometimes, even though there is nothing news, even though there is very negativity about the stock, but still the share price will rise. So here, that is the first rule. What is rule is market or everything. So at the end of the day, here this data what is telling is, even though this, even though there is positivity about the stock, if there is no data, if there are less contracts on this side, if there are high contracts on this side, so obviously the share price will fall. Again, if there are high contracts on this side, on call side, and there is not much positivity about the stock, still the share price will rise. And second, market has three trends. What are these trends? One is primary trend, one is secondary trend, and the other one is minor trend. What is the primary trend is here, see, what will happen is if share price falls today, if share price falls today, it will fall another day. It will fall for third day. It will fall for fourth day. It will fall for fifth day. But after fifth day, it will definitely rise. It will not happen. Okay, if you are selecting a stock with good fundamentals, I mean with a good company, good fundamentally company, then even though the share price is falling on the short term, it will definitely rise on the long term. That's what this second rule is telling. Primary trend in the sense, see, a primary trend is the share price will fall for 1 days, 2 days, 3 days, 4 days, but that doesn't consider as bearishness. That we don't consider it as bearishness. We will consider because after third day or after certain days, after short period of time, it will definitely again rise if the company is good fundamental. If the company is with good fundamentals. So that is primary trend. So in secondary trend, we are having some phases. Like in secondary trend, if the market is bullish, like I had told, like previous, even though there is not that much positivity about the stock, I mean, even though the results are not good, even though there was not much positivity about the stock, but still the share price is rising. In that, there are three phases. One phase is accumulation phase and participation phase, excess phase. So in accumulation phase means it's like consolidation or holding without going up or down. Participation phase in the sense where different investors will participate in the market, and excess phase in the sense the share price will rise further, breakout will happen. And if the and in secondary trend, I mean in short term, if the share price is falling, and there are again three phases. What are those phases? One is distribution phase, one is market participation phase, and the one is panic phase. Distribution phase in the sense investors will start get exiting. I mean, investors will start selling the stock. Market participation phase in the sense again the selling will increases, and at the end of the day it will create the fear or panic in the market, and then and again, market remains in primary trend until confirmed reversal occurs. So at the end of the day, what the essence in the sense, even though the share price is falling in the short term, it doesn't mean that the share price had become, the stock had become bearish, completely bearish. Until it is fundamentally good, the share price will rise again. So, and for that, we need to check the volume. That's what Dow theory is telling us. So at the end of the day, so here the conclusion is if you need to understand the range of the market, if you need to understand the support of the market, resistance of the market, so you can simply check on this open interest of any stock. You can, I mean, I'm using Yahoo, or you can in brokerage apps too. You can simply go to uh, I mean, you can click on any stock, and you can see the open interest of that stock, and you can just check what are the call contracts, how many contracts are there on the call side, and at which strike price there are high call contracts, and which strike price there are high put contracts, and you can consider it has range. And when there are high contracts, it is definitely means that it is forming a support level, it is forming a resistance level. Because why it is forming a support level in the sense these people had, I mean, this it's not in, I mean, here, for example, you are seeing 1157 contracts, 1157 contracts, in the sense they had purchased approximately 1,15,700 shares of Tesla. Each cost $222. So when they had purchased by such a huge amount of money, why will they think of getting the losses? Here, everyone, each one of them, from top to bottom, even from the $50, you can see at $75, you are seeing 15 open interest. Like 15,000 shares had been purchased at the strike price, because They are thinking like, okay, if any suddenly, if any war breakout comes, or suddenly any COVID like any symptoms comes, any diseases comes, so then the share price will rise. Then the share price will fall very further, and it will get benefited. Here, these people are thinking. So again, when these people are purchasing, they're keeping their money, they are purchasing their interest. Why will they think to? Uh, why will they think to get losses? Here, everyone wants profit. Each one of them, from $75 to $450, every one of them wants profit. Here, no one wants losses. So you can consider this as support levels, resistance levels. Where there are high contracts, you can consider it as resistance or support levels. And based on that, and it will get easier to, yeah, it will get easier to make informed decisions. And yeah, and about the expiry date, and again, it depends on how much. Obviously, now I'm looking at what will be the Tesla share price in this week. In this week, I'm not looking. So when I am looking at in this week, I will look at the nearest expiry date. So, I mean, it depends if you are investing on the long term purpose, if you are investing on the, obviously, I mean, here my intention is like about the expiry date. Yeah, about the expiry date, in the sense it will depends on how much term you will want to invest. Do you want to invest it on some 1 week, or some week, or some long term, or some 1 month? It depends on that. According to your investment strategy, according to your time frame, yeah, you can decide the expiry date. So obviously, I mean, if I want to look at the nearest moment of the stock, if I want to look on what range the Tesla will move on this week, then I will look at the nearest expiry date, because it will tell about more accurately. So yeah, that's it. I mean, if any of you have any doubts, please ask.
Can you hear me?
Yes.
Yeah, we we're going to discuss anything about like moving averages, like 50-day, 100-day.
Yeah. So again, yeah, moving averages. Yeah, this can be, yeah, this can also be used as a support level. I mean, moving averages, Fibonacci levels, pivot levels, standard deviation levels. All of these, there are different levels which can be used as support or resistance levels. So here, just like I just want to give an introduction, like I mean, we can discuss it more on the our further upcoming sessions. So here, just like in the sense, moving average in the sense, it's just like a mean. I mean, in statistics we have mean. I mean, for example, in a class there are 60 students. There are 60 students. If a director of that school come to that class, and he will ask what is the percentage of this class. Okay, the lecturer will tell average value. Okay, these people will eat somewhat, like in marriage it will happen, like in marriage, if we are calling 200 people to marriage, what we will do, okay, let's cook 100 kg of rice. So how that 100 kg is coming, it's average. So just like in moving averages also, so what we will do means, uh, in stock prices, uh, I mean, in stock fluctuations, how much time the averages is happening, we will we will calculate based on the averages. So here it and here we need to analyze the stock. Like for example, okay. Here it doesn't mean that 200 moving average is important, 100 moving average is important, 9 moving average is important, 45 moving average is important. There are no specifically mentioned moving averages. Like for example, again I had told in the previous example, previously I had told. See, there is a Dhananjay in my example. He had purchased the 10 million shares of Nvidia, and he had also taken put contracts. If the share price is rising, he will sell his shares. When he will sell his shares, he will sell according to his strategy. He will not sit like, okay, I will sell these shares only when the 200 EMA will come, when the 9 EMA will come. I mean, the investors will not sit like that now with the institutions. When the institutions want to sell these shares, or when the institutions want to purchase these shares, when anyone, again, retail investors, including you and me, if we want to any purchase shares, if we want to any sell shares, we will not sit and analyze. No, no, I will only sell. I will only purchase the share when it will come near 9 EMA, when it will come near uh, like 50 EMA, 100 EMA, 200 EMA, or I will sell only shares when it will come near some certain EMA. No one will think like that. So here, moving averages, it will analyze like how it will analyze the support. Like for example, here you can see 9 moving average. So it is obviously there are some algo tradings happens. So when the algo tradings happens, there is high chance that it will 9 EMA, 200 EMA, it will get important at those times. But here generally you can see at 9 EMA it had taken many times support. Historically you can see many times it had support. Almost I can tell that every time it had taken support, and again now also at current price it is again taking the support at 9 EMA. So, so here EMS can also be used as support levels, resistance levels. So again, at the end of the day, it will all of these things will take back to again the data, option data or open interest data. Again, the same historically, and yeah, we will discuss it more. I mean, uh, more on our upcoming sessions as this time.
Yeah, sure. Thank you.
Yeah. Yeah, or are there any other? Yeah, and of course, I sincerely apologize. I know that if you people are listening it for the first time, or if you are new to this concept, obviously it's very difficult to understand at the first time itself.